What's up everybody? Welcome to the Stocks channel. My name is Cory and welcome to your daily stock market technical analysis update. We saw the stock market take an opportunity to cool off today, and the question to answer is, are we ready to continue to melt up now that stocks have cooled down a little? Before we jump into the charts, please help me out by smashing that like button, and if you're new, go ahead and subscribe so you can follow along with all of my daily updates. First up, we'll take a look at the SP500. So let's crack open this chart and see what's going on in the stock market today. Alright, so we see the S&P500 going down negative 0.48% today and closing just below our resistance level at 3611. We're still trading above that 5 EMA, so we still have that bullish price action, and we're still above our important resistance trend lines. So the real test is, are those trend lines going to act as support now that we've finally broken above those levels, and it's starting to look more and more like it's not going to be a false breakout because we're still trading above these levels even though we broke out above that trend line 2 days ago. So jumping over to the SPY ETF, we can see that we did find resistance right at that $362 level on the SPY ETF, and we're still trading above the 5 EMA. So the longer we're above this trend line and the longer we continue to trade above the 5 EMA, the more likely we're going to continue to see this melt up play out. Remember, there's a lot of bulls in this market, and until they stop buying, the stock market is going to continue to go higher and higher. There's going to have to be some big money selling to really shake this melt up. Otherwise, it's going to continue to just keep heading higher. So the longer we trade above this trend line, the more likely this is the real deal breakout, and we're going back into an extreme bull market that could last for another year or two. We still have to prove this trend line by testing it as support and getting that confirmation bounce though. So right now we have that bullish trending and that bullish price action, and the support levels we want to watch below are the previous all-time high at 357 and the support trend line, which is also right around 357. So we have a pretty good test coming for the bulls at this 357 level on SPY, and when we finally do get a pullback into this range, it's going to be a good test of whether or not this is going to be a bull market, or if this was just a melt up, too much optimism and too much euphoria that's gonna get punished. Only time will tell if this melt up is gonna be punished or if it's the real deal beginning of the next bull market. So if we do start pulling back and closing below 357, we could still find support at our 0.236 Fibonacci at 354, our 13 EMA, which is also gonna be somewhere around 354 in the next couple of days. And if we keep pulling all the way back to the 0.382 Fibonacci retracement, that level at 348 is also going to be a strong level of support. Now, in a melt-up market, we're not expecting to see 348 anytime soon because the trend and the price action are too bullish to expect a pullback that far. We will see a price action close below the 5 EMA, which will be the first sign that we're likely going to head lower. But right now, you can see the price action has been closing above the 5 EMA ever since the end of the election, and we just continue to keep climbing higher and melting up in this straight line. Next up is the Nasdaq 100 QQQ ETF, and the Nasdaq 100 has by far been the weakest of the three indices, but it's still looking pretty bullish today, testing its breakout as support and now holding up above 291. So previous resistance is newfound support, which is going to be bullish, and if the Nasdaq can hold above this 291 level, we're going to come back up and test this 294 resistance level, which was the previous highs on the daily chart. If we break 294, it's game on for the bull market for the Nasdaq 100, and we're likely going to see our price targets of 300, and if we break 300, we're going to head up to $312. So the Nasdaq 100 is by far looking the weakest, but it's also consolidating and building up energy for that breakout of this 294 resistance level. Now, if the Nasdaq 100 starts breaking back into this wedge and breaking below the 5 EMA, we could see these Fibonacci retracement levels at 287 and 283 yet again. The 50 EMA should be back up into this level by then, and we should find support above the 50 EMA if this is going to remain a bull market. There's not a whole lot of reason to talk about a bear market or bear cases right now because we have such strong bullish price action and bullish trending across the board. It's not even really worth going over those scenarios until we start to see something reverse in this bullish trend. Next up is the Dow Jones DIA ETF, and we see the Dow Jones did close that gap, which was the previous all-time high at 296, and it did act as support. So again, that's extremely bullish, and we're still trading above the 5 EMA. So we got that bullish price action, and we still have that strong bullish trend. So all three indices are still looking bullish with the bullish price action closes and the bullish trending only strengthening. If for some reason the Dow breaks below its previous all-time high, we could see the Fibonacci retracements at 236, which is a price target of 290, or the 0.382 at 285. Don't forget about the gap on the Dow, which comes all the way down to 284, but we're not likely going to close that gap unless this bullish trend reverses. So right now the trend is extremely strong to the bull side. So it's not really likely that we're going to see that gap close anytime soon. Next up is the VIX, and we see the VIX kind of hanging around this 22 level, and that's pretty good for the bulls because a lower VIX is going to mean a strong stock market because there's not a lot of fear in this market. Now the VIX in the 20s doesn't mean there's no fear, but if the VIX continues to head lower towards that $18 gap that we had from the March crash, we're likely to see a lot less volatility in this market and to see the stock market continue to slowly grind to new all-time highs. On Amazon, we see the price action closing above the 5 EMA today, and it looks like Amazon's starting to regain its bullish price action with the close above the 5 EMA, and we could see some bullish trending developing in Amazon soon. A bullish trend on Amazon should bring us back up to resistance right around a price target of $3,400. On Apple stock, we got another bullish price action close above the 5 EMA, and you can see with these moving averages that we're really starting to develop a bullish trend on Apple. Apple is that market moving stock, so bullish trending on Apple is likely going to drive the rest of the stock market higher with it. On Tesla stock, we did get a breakout on that SP500 news for Tesla, which is bullish, and we did see Tesla find resistance at the previous daily high right around that $460 level. We also did find support at the resistance breakout trend line, which is now a support trend line at $432. So Tesla's looking good, and you can see the bulls are trading right at the top of that upper Bollinger Band. So it looks like Tesla bulls could be back from their vacation in China now that the Chinese EV stocks have had their earnings. They could come back to Tesla, and we could see another bull run in Tesla stock. On Nvidia stock, we see a good close right around all of the moving averages, and this is really a consolidation around support, which is all of the moving averages, and we're starting to develop that bullish trend. So Nvidia did bounce off support, and it's starting to close above all of its moving averages, so it's likely Nvidia's heading back to $570. If Nvidia breaks and closes above 570, look for that level to act as resistance and watch for the bounce of support, and then we'll start heading to new all-time highs on Nvidia. So Nvidia is looking good, and it looks like all this energy building up is going to start going in the up direction very soon. On Boeing stock, we continue to see bullish price action continuing to close above the 5 EMA, and that bullish trend is getting very strong, and you could see the 20 simple moving average and the 50 EMA are aggressively sloping to the upside. We're definitely going into a bull market on Boeing, and as soon as this 20 simple moving average crosses the 50 EMA, this is a dip buying opportunity for Boeing. So Boeing's looking really good with bullish trending and bullish price action, and it looks like it's ready to run. The US dollar did look like it held up above support, and it's still in that bearish price action and bearish trend mode. So the dollar needs to start bouncing off of the support to prove itself, otherwise it's likely that the bear market is going to take over and we're going to see the dollar continue to weaken. A weak dollar is a bullish stock market. Gold's looking pretty good. It's still just consolidating right around its 5 EMA, but it's still looking like it needs this trend to reverse because all of these moving averages are still stacked to the bear side. The price action is holding up above support, but we need to start seeing gold close above that 5 EMA. On silver, we're still consolidating around the moving averages, which is like a spring building up energy, and we're likely to see it pop up or down in either direction very soon. We can't trade along these moving averages for very long without a huge move in some direction. So it's looking like it's going to favor the bulls because the price action is bullish, and we could come up and test this 25 resistance level very soon on silver. Bitcoin's looking really good, and we did exceed our price target at $17,000, and we did have a Fibonacci extension level at $17,500. So Bitcoin is getting very bullish, and you could see this huge increase of volume today. The price action and the trend are extremely bullish, so it looks like we're likely heading to our next price target at $19,600. We could get there in a flash because it looks like Bitcoin is starting to get the FOMO crew, and we're starting to see a lot of people trying to pile into Bitcoin at the highs. Remember, this is a buy low, sell high market, and I don't suggest chasing Bitcoin. Wait for the next opportunity on the next pullback. If you were too scared to buy Bitcoin in the $9,000 and $10,000 level, there should be no reason that you're rushing to buy it at $17,000. The financial sector still has bullish price action and bullish trending. The industrial sector still has bullish price action and bullish trending. And the healthcare sector looks like the price action is starting to cool off, and we did get it closed below the 5 EMA. So it looks like healthcare still has that strong bullish trend, and it's just cooling off from the strong uptrend that it's had since the low. So overall, the sectors are looking bullish, and we're still seeing extreme bullish price action and trending all across the board, which is likely to mean that our melt-up scenario is going to continue. So going back to the S&P 500, we do have resistance on the SPY ETF at that $362 level. So watch that level for resistance. And as far as support goes, watch that $357 level. If we test 357 and get a bounce, that's going to be extreme bullishness. And we're likely going to start melting up closer to our $400 price target on SPY. So as long as we have this extreme bullishness, the melt up should continue. So I don't suggest trying to short this market or trying to call a top. If you haven't already bought into this market, don't bother chasing it now. Just be patient, stay in cash, and wait for the next buying opportunity. Don't forget about the Stocks Channel Trading Discord. If you're looking for a community to trade with, you can learn how to join the Discord server in the description below. So please remember to help me out by smashing that like button. And if you're new, smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.